Axis Bank all set for a big re-rating after a solid set of numbers that have come in. We've started to see the momentum building for HDFC, but the elephant can dance. What about Axis and what are brokerage firms saying? Let's go across to Harsh to find out more. Good morning, Harsh. So good set of numbers. Brokerage reports are in. Is this a stock that's in for a big re-rating?
Well, yes. Let me first take you through the numbers itself. The net interest income went up a solid 32.5% on a year-on-year basis, slightly elevated or slightly higher than what we had really penciled in. Operating profit also therefore was slightly higher than what we had expected, but so were the provisions. We were expecting sub 1,000 crore worth of provisions, but Axis has this time provisioned for almost 1,400 plus crore worth of provisions, and therefore PAT slightly above what we had penciled in, 62% growth in PAT. Now, in terms of the highlights, the NIM number was extremely good, 4.26%, but also contained a 5 basis point worth of one-off. So around 4.2%, a very healthy NIM number there. When I'm looking at slippages as well, what they have suggested or the commentary has suggested is that there are non-recurring prudent items which they've provided for this time around. So therefore, slippages are a little elevated. Overall, OPEX continues to moderate, so that's a positive. Advances growth at 15%. Largely, it's still below system level, so that's something that Axis needs to figure out. And 10% deposit growth as well. That also largely in line with the system, but obviously slightly slower than some of its larger peers. Largely with regard to brokerages, well, we'll start off with Morgan Stanley. They continue to maintain an overweight. They've upped their price target to 1,200 rupees a share. They've increased their PAT by 9%, or rather, PAT has come in 9% higher than what they were estimating, and they've increased their PAT going forward, their forward projections for PAT as well. Valuations, they believe, at 1.8 times FY24 forward looks very attractive, and asset quality is better than what it was at normalized levels. JP Morgan also has an overweight on Axis Bank. 1,100 rupees a share is their target price. They believe that NIMs were largely aided by rate hikes, which is the reality. Loan growth is up 15%. They believe that's reasonable but lower relative to peers, and they've increased their FY24-25 EPS estimates by around 8% on the back of those higher NIMs. They believe that Axis Bank can sustain this higher ROA profile. And let's quickly go on to Axis Bank's management, listening to what they had to say yesterday.
We are seeing a broad-based growth in corporate loan demand. There is strong activity in segments like renewables, roads, chemicals, urban energy distribution, commercial real estate, and healthcare. Capacity expansion projects are picking up, especially in consumption-driven sectors. Pricing has seen improvement compared to what we were seeing 2 to 3 quarters back. We continue to choose opportunities that meet our return threshold. Third was around fostering a winning mindset. Like I mentioned earlier, Axis mobile app is the world's highest rated mobile banking app on the Play Store with a rating of 4.8. It has over 16 lakh reviews, which is the highest across 59 global banks, 8 global neobanks, and 50 Indian fintech apps. The app now handles over 65% of all service requests by volumes. We also retain our leadership position in rupee-denominated corporate bond issuances for the 16th consecutive year based on Bloomberg League table for India bonds.